Hey everybody, this is Jim at SP500chart.com. It's about 3:15 on Sunday afternoon, October 19th, 2014. We're going to take a look at the S&P chart, try to figure out what's going on. And before we do that, I just need to remind you, as always, that the website and this video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's take a look. Well, we came into this week knowing that we were in a broken trend when, especially after we saw a continued weakness underneath this green line, which I'll remind you was part of this little consolidation pattern here. Here's the resistance line, here's the support line. Our idea was that if we broke out of the top of this line, then we would be looking at a minimum move to retest the 2020s. And if we fell down out of this pattern, then we should be getting down to about 1868. Well, we got down even further than that. And you can see that starting on the 9th, we were in a pretty steep descending channel. So there's that support line that broke. That broke actually on Friday. But coming into the week, there was, at least I had, a little bit of hope that possibly we could bounce on some of our support lines that we closed at. Instead, we broke down underneath those lines. Now, I'll remind you that blue line is, I honestly don't know exactly how dependable it is, because it goes back and we don't have a touch on this line for more than 2 years. So it's kind of hard to pick those 2 or 3 points way back when and get them to be to get everything within a high degree of precision. If you have a trend line that's got a number of touches, including one that is at least one that is close to you in time, then it's a much easier job. But this one just doesn't have that time proximity tag. That sounds pretty good. Time proximity tag. We don't have it. So we broke underneath that line nonetheless. We also were looking at a support line right here, and another support line right here, and this is what makes things kind of interesting for what we saw on Wednesday. Wednesday looked to me, and I said it at the time after the video, like we may have seen some short-term capitulation, because every descending support line that is on this chart on Wednesday got taken out to the downside. This one did. This one did. This one did. And all of that tends to tell me that that's the irrational fear taking over, to whatever degree. When you bust down through already descending trend lines, especially if it's one that's already descending at a serious rate of descent, and you break down through that, oftentimes that's a sign of a bottom. Where is a really good example of that? Well, a really good example of that, I guess we got to go to a 4-day chart. It was back here. When the S&P bottomed out, we spent significant time at that point underneath every conceivable trend line you could draw. And yet that was the bottom. That was the time to buy. That was where the irrational fear was running rampant. So we take out those temporarily, take out those descending support lines, and then we immediately get back above them. Not only that, we end up, at least in short-term terms, we end up with a reversal off of that extreme bottom. So that was a pretty good indication that this was at least a short-term bottom. Now, as we look at what has took place through the rest of the week, it sort of looks like we're trying to set up a channel of sorts. The only thing that's kind of a little goofy here is that we got a number of touches right here. We had one little, what's the word I'm looking for? We had one little move above this line, and we ended Friday with a move below this line. So here's kind of what I'm thinking. I'm thinking because of the shape of this little bottom here, we should be seeing a move over 1900. But we did not bounce very well on touching this line later in the day on Friday. As a matter of fact, it sort of looks like we broke through that, and now we're just kind of hugging it on the way up. That doesn't look particularly strong. So I'm thinking that that what'll happen on Monday will be one of two things. Either we, and pardon me for saying this, because it's going to sound like a real cop-out, but either we go up and we reassume position in this rising channel and we rally, or this was a significant event on Friday and we come down to test support again before we rally back up. I think from where we are right now, the eventual condition will be that from 1886, at some point fairly soon this week, I believe we will be over that. But I can't tell you whether we, just because of where we are in relation to this line, I can't tell you with any reasonable certainty that we are going to rally up immediately, that the markets are going to reverse their opinion that we should be below this line, and we immediately go from 1886 to somewhere in the low 1900s, or if we sell off, come down maybe even to the 1870s, then rally off of that. It's just no way. There's just no way I can know. And I think being underneath this line, if we were over this line and we had closed on a touch of this line, then I would say I would expect some support there and a rally to start the week. But we're closing after about an hour and a half, maybe 2 hours of really kind of flirting with wanting to get underneath this rising support line. If there's anything that's in favor of a rally, it's the fact that any little channel that we might have set up here on the 1 minute chart, something like that, it's not perfect, but we are at least above that. But you can see where we are in relation to what one would expect to be some support right here. Just not that convincing. So let's see. It could be that as we go and we get a little bit more information, it could be that we revise these channel lines a little bit. But and finally, the other thing I want to show you is we had this kind of inverted head and shoulders like pattern down here at the bottom, and there is a possibility, I'm just going to borrow this line, and there is a possibility, and I don't want to speak too boldly about it yet, but there's a possibility that we may have another one here as well. We'll know more on that later. Let's real quickly, I want to take a look super quickly at some other indexes. The Dow Jones Transportation Average, you can see here, it looks like this index put in maybe a little double bottom, which should be sending us back up a bit to about 8250 or so. And if we get up there, then in the transportation average, I would say we would look at a trend line, something like that. Now, to where if we can break over that, then we may be in good shape. But I want to show you on a daily chart that just like we have seen the break in the S&P, we did break a long-term support line. This is almost the exact same line that we broke in the S&P that we've talked about as well. That line that had been working for about 2 years. Okay, let's look at something else. The Dow Industrials, really, to be honest with you, just look pretty weak. You can see that there's our long-term blue line that again kind of matches the long-term blue line, not exactly, but fairly closely. It matches the long-term blue line that we've seen and been following in the S&P. The Dow Industrials really just look to be pretty sad right here, to be honest with you. There's another line right there that had been operating for a while. Again, we've got that same line in the S&P that's broken down in both of them. So we need to watch this pretty carefully. There is a possibility with this newer low right here being set in relation to the one that was in place in August, that we could back test this line right here, and a failure to get over that line on a back test could be setting this up as a topping pattern. The Russell, you can see I do a good bit more charting on. The Russell either needs to get up and go here, or we're at risk of shaving off another 9 to 10% in this index due to what appears to be a fairly clear head and shoulders top right here. We are currently flirting with trying to get back over that neckline, and you know, again, the markets really, once we got underneath some of these rising support lines, things kind of took a turn that we have to own up to and say this is not looking good for the bulls. That does not mean that we will not see some form of rally. The question is, when we see that rally, where does it take us? And if it just takes us back to tested lines that have broken down and then it reverses back down, then that's where we know that it is likely that we are in for at least an intermediate correction that could have some duration to it. And again, looking once again at the S&P, you can see this line is broken, this line is broken, and let me zoom in just a little bit. And even though we've got the possibility of some patterns that would tell us we should be getting up, maybe even over some of these lines, I still think we've got to watch them really, really carefully. Finally, there's one other thing I want to show you in the S&P chart. Okay, looking here at a monthly chart, I just want to show you one thing real quickly here. Coming off of the 2002 lows, the S&P rallied hard, then entered a period of appreciation that followed a trend line, this red line right here. That would be roughly the same line as this red line that I'm pointing out right here. Not exactly, but fairly close to it. So if we do see some significant weakness, I'm sort of the opinion that this red line, currently down here in the low 1700s, that this could be a spot where one would expect a significant bounce. Again, that's another 9% underneath where we are today. So that would be almost but not quite entering that bear market 20% territory that people like to talk about. Not quite, though. So, guys, just to let you know, there is support underneath us. That doesn't mean that this bull run off of those March lows in 2009, that this is all finished and kaput. It doesn't mean that, but I think it means we do need to watch this very closely. And if we start to see, for example, if we were to set a new low underneath, well, let's say this low that we set back in early 2014 that was around 1740. If we were to bust through that, then I think that may be a sign that yeah, this is getting weaker, and this is showing more weakness than maybe what it will be able to overcome with relative ease. Guys, I'm sorry I'm rambling. I didn't get much sleep last night. I was feeling kind of ill. Felt like I was coming down with the flu or something. So I know that this is probably not the sharpest and the most together presentation I've done here. So let me just wrap it up real quickly, real succinctly if I can. We broke through this descending resistance line. Let's see how much steam the market has left. Let's see if we can get back over this blue line. That would certainly be good. And let's see what the rest of this week brings us. We've got right now any line underneath us is support. Any line above us is resistance. So I think that's the long and short of it. I think it was a good call this week that we said this was a likely bottom, but how far we get off of that bottom still honestly remains to be seen. So guys, thanks for watching. Thanks for your support. Take care.